Hello and welcome to our Cities ABC video podcast series. My name is Dinis Guarda. We are here to talk about ideas, cities, and the challenge and solutions we're facing when it comes to adoption of technology, emergent, new disruption technologies, digital transformation, and all the biggest challenge that humanity is facing, especially from the level of how we live, how we can improve, and the so-called Fourth Industrial Revolution, Society 5.0. In this series of interviews that right now is passing the 2 million views, we've been actually interviewing and profiling global thought leaders, some governmental ministers, authors, academics, and CEOs of global companies and organizations, but especially people that are coming up with new narratives, new research, new ideas that they can actually improve the way we live and the way we coexist as citizens in cities, in nations, and as well in our society. This video podcast is brought by citiesabc.com. That is the platform we created precisely to profile the best of cities and to create better digital transformation tools that can actually enable cities and citizens to have the best of the digital tools that we have nowadays. And the platform is growing quite substantially and is connecting with a network of universities around the world. Today, we have with us Dr. Alexander Kern, that is a German citizen living in Monaco, and as well with a Ph.D. in Corporate Finance and Innovation Management Science, and from the University of Aix-Marseille. He is currently the managing partner of the Euro-Institute Monaco, merger and acquisitions consulting firm. Dr. Alexander Kern has he spent a year in Harvard University at the National Bureau of Economic Research, where he worked as a research assistant to Professor Dr. Richard Friedman. And his dissertation investigates the outcomes of shared capitalism, employees' stock ownership on the weighted average cost of capital at listed companies such as Silicon Valley IT companies. And the results of his research were presented, for example, at the International Conference and at the European Commission and the German Finance Minister. So at the moment, Dr. Alexander Kern is a professor of Group in SIC, Monaco University, and other universities in south of France, and has been advising multiple startups in the areas of technology, scalability, and as well particularly interested in the areas of research of how technology, investment, and as well smart cities technologies can actually improve the world we live. Alexander, pleasure to have you here. Welcome to our podcast series.
Hi, Dinis. Thank you for having me. It's a pleasure being here.
So I want to buy, you are a German living in Monaco, which is quite an interesting part, but you keep a lot of your German identity, but as well, you've been in south of France for a long time. So could you tell us a bit about your background and as well from education and how you end up in Monaco, which you are quite prominent right now and active as well, but as well all your work in terms of academic background for us to start.
Sure, with pleasure. Yeah, so it's true, I'm a German citizen. You hear that probably also on my accent, but I've been living for about 12, 13 years here in the south of France or in Monaco. And yeah, my background originally, what brought me to Monaco was that I was actually in Germany quite active in politics, was working for the German economies minister for a while, started all with like a basic internship when I was 16, and I had to do that during my end of my graduation and school time. And after that, what I was doing was I was quite involved in the German politics space, was running myself when I was 18 for state parliament in Rheinland-Pfalz, which is a local state in Germany. I didn't expect at that time actually to get into parliament, but it turned out that my result was pretty good. And I was the first one entering the parliament in case someone would have dropped out. That led me to the position that I got a board member of one of the German banks, which are still mainly governmental owned. They are called Sparkassen, at that point with roughly 1,000 employees. Myself, I was working then as well for about 3 years in that bank. And after that, I was thinking for myself, I need a little bit more of academic background, as I was really after my university, my high school degree, directly in the work life. So I was looking for an international university to start studying, and by any chance I came across the International Business School in Monaco, and I was doing my undergrad studies here. It was a normal business school degree at a private university, normally a 4-year program, and I managed to pass that in 2 years. After that, I did my master at the State University in Nice at IAE. And after that, as Dinis already introduced me, I was doing a PhD in corporate finance at Aix-Marseille. During that time, I got the opportunity then to move to the States, as I was working on a research topic which was also of interest for Joseph Blasi and Doug Cruz at the Rutgers University. So I first joined them there, and through that I got the opportunity to work with Richard Freeman, the National Bureau of Economic Research in the States, also based in Cambridge, Boston, or Cambridge, Massachusetts, and then also working with him on certain research programs around the Harvard University, and mainly on a project for the European Commission, in which we had been analyzing if employee stock ownership can stabilize an economy. The idea behind that concept was really to say, how do we allow people to participate in capitalism, but not in the way as many people understand it, that you generate in an economy very wealthy people and other people who are working for that group of wealthy people, but here creating like wealth which is spread out through the society, as people would be owning their shares in the productive capital, so in companies essentially. That was a project which was presented then to the European Commission, as well as in the German Parliament, to the German Finance Ministry. And I got back here to Monaco during the end of my PhD, started teaching at 2 universities, here in south of France at EDEC, as well as at IUM, which is part of INSEC Group. And from now on, I've been active as an advisor, consultant on the startup side, but moreover, I've been working with a number of investment funds, which typically are working in the alternative investment space, focusing on sustainability, renewable energies, but also startups which create innovation and new technologies for future generations.
Well, that's quite impressive, and I think especially your research, and that's one of the reasons I wanted to talk with you, is your research about, I would say, probably sustainable capitalism, let's put it that way. I know that the term is not that, but the concept is around that. It's particularly relevant more than ever right now with everything going on in the world, and as well with COVID created actually a massive issue in terms of special disruption in terms of the wealth distribution, and actually a lot of levels of poverty at the moment. Some studies are saying that actually there's probably more people dying actually of hunger than actually of COVID, which is kind of a massive statement to say less. So I would like to go through that research of yours, and as well that was with one of the leading economists in history. So can you tell us a bit about that research and the work you did on that, which I think is more relevant than ever right now?
Absolutely, with pleasure. Actually, I would like to start then with a little anecdote. The first time I went to Cambridge to meet Richard Freeman, I went to his office and knocked on the door. Someone shouted, "Come in." And I came into that office full of books. You could barely see someone sitting in that office. And for the people of you who might have seen or know Richard Freeman, he's a real character. So he was sitting behind his books, barely looking up to me and just saying to me, "What would be if robots are taking over the world?" And I was a little bit shocked. I was studying economics, I was studying corporate finance, but I didn't expect like a professor for economics asking me if robots are taking over the world. Well, what does he mean with that? turned out it led to one of the most interesting conversations I've had in my life, because what it meant was the robots were not really now the science fiction robots which you think of, Terminator type of robots taking over the world. But the problem is that we are living in a society where innovation is coming faster and faster. And a lot of labor activities, which we had in past economic developments, will be coming less. So a problem for the society is if only a few people are owning the computers, the companies, the robots essentially, because those people will benefit from it. However, the idea is if everybody has their own robot, or everybody owns productive capital, people will create a stable mid-class in society. And it doesn't matter if they are then working or not, because productive capital will serve for them. Hence, the idea of giving employees shares in the company they are working for will allow them over their lifetime to generate a stable wealth and a stable income, which will always be there, even if they might not be able to work anymore, either for unemployment reasons, on the other hand, for retirement reasons, or just that their work at this current stage is not that demanded as it used to be. But owning productive capital, like shares in the company, yeah, that's really where we saw the opportunity for the future. Hence, Dinis called it sustainable capitalism. The phrase which was created by, or the term which was created by Richard Freeman for that was shared capitalism. So which essentially has the same meaning as that sustainable capitalism.
Yeah, that's a very powerful thing. So in terms of your research, I know that this research brought it to the European Union, and I think it's the two sides of the barricade, because in one end we have the United States that is completely driven by capital, and at the moment is in a very crazy situation because it has still some of the best universities, but the country in itself is almost collapsing in terms of a kind of a civil war. But this kind of dichotomy around the capitalism and the way people see capitalism, especially right now with everything happening around the COVID-19, is accelerating this kind of questioning of the capitalism firstly, and as well the shared capitalism is not working as probably we would like it to work, because effectively, for instance, if you look at the studies, and you're the researcher, I'm less researcher, more of an entrepreneur, a kind of different research, but one of the things is that definitely, for instance, if you look at the last 50 years, I was reading an interesting research, let's say in the 60s or 50s, the salary of a CEO, top level CEO, would be like 17% or 17 times probably bigger than the normal employee, or even less. Now is around 200 to 1,000, which shows that these corporations are becoming bigger and bigger. And for instance, the case of Jeff Bezos, he did $12 billion in one day. And as well, so we have we have a big challenge. And of course, this is not to put anything wrong with capitalism, but it's just the challenge that we're facing. In one end, these companies are doing everything on a meritocratic basis. It's not like they're doing any crime to do what they do, and they do it within the law. But how can we improve this system where at the moment we have definitely 40 million US citizens unemployed, and as well almost in the limit of poverty, and as well where we have most of the world right now going through massive challenges of lacking, and as well comes back to the machines that you mentioned. As we automate society, we have all these challenges. So how do you see that from an academic, and as well from a perspective, and bearing in mind all the work you did both in the US, but as well in Europe, and as well, of course, the leadership of Europe is actually precisely in your country where you actually served the parliament. So I would like to hear that. And of course, you are in France, which is the second economy. So just, sorry, so a lot of questions, but I just want to your views on this.
Yeah, maybe to start with, I need to say a couple of words about how that concept of shared capitalism or employee stock ownership is working or should be working. So the idea is, if someone becomes an employee stock owner, so an employee becomes an owner essentially of the company, he will get, and that's depending then from country to country in terms of legislation, where you might get like financial advantages out of it, you might get decision-making powers of it, or like as of the case of Germany, which is a hybrid case where employees will get certain board seats, etc. So there is no standard system around the world existing. But the idea is that you merge the interests between employees and owners. Hence the same also applies to the management of a company. If a company is like has a top manager, and I'm not talking now only about the CEO, but like typically those people would take decisions which are benefiting themselves. So might start with simple things like as taking a business class flight. Is that really always necessary? Can be questioned. But there are also bigger decisions where a CEO of a company or top management of a company might take certain short-term decisions, such as certain acquisitions of companies, as their salary and their compensation is currently based on rather the short-term success of companies than the long-term stability and the long-term success of companies. So those companies are not anymore family-owned. Family-owned companies tend to have much more long-term vision. They want to keep it up for generations, while a manager is often there to run the company, but knows he has like a certain period only of doing that. Now, if in that case, first of all, the manager himself, but also the employees become owners, the interests in that company will change. That's at least the hypothesis. So in that moment, there should be a shift to taking more productive decisions or more effective decisions, which are good over the long term for the company and not over the short term, benefiting an individual person. The question is now, and that's a proportion question, and that's also, on the other hand, a corporate governance decision, and it's also governmental decision, how to put. So really trying to turn those companies from a short-term view into much more sustainable long-term business, which goes then hand in hand with the term of sustainable capitalism again, or shared capitalism.
Completely, and I think it's a very good term. I think probably more relevant than ever. Actually, I didn't thought about that for this call, but it makes completely sense. And I was looking more from the angle of sustainability, but I think this is key, because I think if you have at least some kind of rules, I think no one wants to create this dystopic world we partly are living right now, especially where we have the best technology in the history of mankind. Where we have actually a lot of fantastic, let's say, if you look from a perspective in history of humanity, even with all the problems, we are in the best times, because of course there's a lot of challenge, but even the number of deaths, let's say if you look at the 1920s when we had the last pandemic, there were 50 million people that died. Right now we are less than, and there was at the time there was around 2 billion people on planet. At the moment we have 8 billion people, and we're talking about 800,000 people that died. Of course, it's still very bad, given all the intelligence that we have and technology, but it's still, the numbers are much, much, much lower, and we have much better things. So from this research, and in the last, let's say, past almost 10 years, or probably more, since the last time you finalized this research, you've been continuing your research, and as well, you've been getting in the theory and the practice, because of course you keep one step in the academic world as a teacher, and as well you are teaching, like you mentioned, in University of Monaco group in SIC, but as well in University of Nice, I think, and others. So how do you look at this academic work that is key? And in Europe, of course, the academic work, I think it's more related with especially the business world, but the thing is that the world of business is becoming less and less Europe. Europe is losing the step on the innovation. Actually, it's a paradox. It has a lot of innovation, but the economy is right now is China, Asia, and still the US. So how do you see these dynamics, and as well being involved in a lot of startups, and as well involved in the Euro-Institute in Monaco and merger and acquisition, so consulting. How do you see these dialectics and as well these challenges?
Yeah, so it's actually true that really a lot of startups or companies, once they reach a certain growth stage, are moving away from Europe. So Europe is still, like, in my opinion, one of uh, the areas of the world where a lot of innovation derives from. Europe has fantastic universities. Speaking with a German background here, like the technical universities in Germany are excellent. And a lot of patents and a lot of startups are created in that space. However, now speaking, for example, of a sector such as health tech, which is related to, of course, like the death of people, uh, um, a problem is that a lot of companies in that space, they start in Europe, they start maybe out of even a research institute, a university, or whatever. But once they get to a certain level of maturity, most of the health or biotech, pharma tech IPOs are not happening in Europe. They are all happening in the US. In the last 2 months, there were two German companies actually doing an IPO, I believe, at NASDAQ, trying to raise the capital. And there are simple reasons for it. And one of the most simple one is actually that in the US, you have more sophisticated investors being much more willing to invest in startups or young companies, being willing to take the risk, and as well understanding the opportunities of that technology more. Europe, and also that is driven by Europe's history and Germany's history, which went through a number of crises in the past 100 years based on wars. People tend to rather go and play safe, meaning like they have rather a little bit of cash below the pillow on a savings account or wherever, but they are not likely to invest it in real productive capital. And productive capital, I mean, in that case, also being a shareholder of those pharma tech companies. And then the US, in that case, is a more proactive market, as well as Asia, as lately with their currency reserves, they are capable of acquiring new technologies, and they are much more forward-looking and also not thinking short-term. That's a very important factor with Asia, that they are having a much more long-term vision for their country or for that part of the world. So they are trying to acquire early-stage technologies and growing them over there, becoming basically part of their own economy. How far? So far, it's still working a little bit in a sense that those companies are going then to the US, or many of them, and then once they have like really gone through like the medical testing, they got certain approvals. Then maybe at this stage, companies such as Pfizer, Bayer, BASF are coming in then again, but then at a very late stage as an exit strategy. So that's really from the acquisition point of view, that there's then an exit, which might be back in Europe, but those big multinational pharmaceutical companies and chemical companies in Europe, they are not anymore interested in the early stage development. They're not interested in the R&D anymore, but they are more focused on the one hand, the marketing and the sales of the successful pharmaceutical products, as well as that they have really the large scale production capabilities, which often those small startups or then at this stage mature startups still don't have, because setting up or developing a drug is one thing, but developing the machinery and having the machinery to produce it in a large scale is again a different ballgame. So that is a bit like how currently the economy works, and how certain startups to mature to much more maturity move to the US, and then essentially are acquired often back to Europe. But I think that will change in the next couple of years in two directions. One is that Asia is becoming much stronger, and Asia will buy much more, and they won't allow that acquisition back to Europe happening. That's one thing. But on the other hand, I believe Europe, which is one of the biggest LPs in Germany, investing in venture capital funds. And I heard from them in the conversation that they are allocating more and more money into like venture capital funds. So privately held venture capital funds, that's really important. So it's, even though the money is originally coming from central banks, from not directly because they don't do direct investments, but like indirectly finding the most sophisticated asset managers which can invest in the startups, understanding the space and the technology much more than big governmental institutions could. So I think that's a very good way, even though that process, in my opinion, is still quite bureaucratic, time consuming, and there are certain barriers. Still, I think it's a very good step, which was taken there about 5 years ago to establish KfW Capital, which is really one of the few entities in Europe, which is really seed funding venture capital firms, which can then grow locally also that type of biotech pharmaceutical companies in Europe.
So, Alexander, so coming back to this, and I think just to wrap up about Europe, this is not an interview about Europe, but I think it's interesting because I think what is interesting is that I am European based, you are European, I'm Portuguese and a bit French, you are German, but you are in Monaco and I'm in London, which are two independent kind of parts of Europe. So I think definitely I've been feeling exactly what you said, that the vision is fantastic. I share completely the vision of Europe. But from the vision to the theory, we see that Europe is completely not putting themselves in the shoes of the people that need. And I think that's really a very key thing. And as well, of course, Europe is very divided, not because of just Europe. Of course, it's not difficult to manage different cultures with thousands of years of history in some cases. But the point is definitely that Europe has a kind of a mission for the small, medium, that are the drivers, and as well I think the sense of entrepreneurship that is key, because I think part of the reason of the United States success and the reason of the European or the US success is the focus on innovation and the focus on entrepreneurship, and the sense that you have to do things, you have to produce in order to get those relationships. So I think these are the things that I would like to see, especially on your research, because you've been doing a lot of research in the areas of course, sustainable or actually scalable capitalism, but as well sustainability, recent in terms of smart cities. I would like to go, how do you see these topics, and as well in the dynamics between universities and startups, which I think still is one of the areas where Europe is still leading, but it's probably, there's a leadership from an academic, but not the leadership from a really create companies that can actually lead the world and come up with solutions for the problems you're facing.
Let me bridge that answer to actually the previous question still to Europe. What I see is a problem in Europe is that it all feels a bit like a World Cup. So even in Europe, countries are competing with each other. So it's not like that Europe tries to find together a vaccine and supports, like, it's not that Germany or German citizens are cheering for French, Portuguese, or whatever company which might have a success in the vaccine business against COVID-19. It's like you hear of your local national success stories, but you don't hear of somewhere abroad. And also I feel like the media coverage, and now doing here, like, sorry, also one step back, but during the time of the Greek crisis, there was also, especially from my personal political background, and I'm a member of the Free Democratic Party in Germany, there was like a very strange view at Greece, as well as Varoufakis, who became at that point the finance minister. I had the pleasure actually a couple of years later to meet him and have heard a presentation of him speaking of their points of view. And to be honest, it was really like a mind-blowing and mind-changing discussion, because he was putting really viewpoints out there which were never covered in the German or European other media sources and outlets. So I think there's really a disruption in Europe in the knowledge available from country to country about other countries. And if you see certain points from their point of view, probably you would work much more as a united Europe in that case. Which brings me to that point of like leadership now in startups. Is still, I have also the feeling that Europe and the leadership in startups are typically competing with each other. It's not that they are competing necessarily as, hey, we want to be the best startup in the world, but like they are always looking just around the corner and saying, hey, we are better than the ones over there. Like we are better in Berlin than the startups in Barcelona. But like, what's that competition? We're living in a global world, so it doesn't mean that you're better in Berlin than in Barcelona, or vice versa, or London and Berlin. And but startups are facing a global competition, coming from Asia, coming even from Africa, coming from Silicon Valley, and more also from Latin America. So startups need to see their leaders, entrepreneurs need to see the global point of view, being open also to move around. I don't think like, because I said before the comment, that companies which are moving from Europe to the US to get their IPO done, for example, that is necessarily a bad thing. Also, I've been speaking to governments in the Middle East, which were considering setting up like a certain, let's say, VC structure, which would invest in European startups, but ultimately with the interest to relocate them at a certain point to the GCC area, to have like over the future there, like a prosperity once they're running out of oil, or oil becomes a less valuable resource or commodity. So I think there are different angles to it, and like thinking of a global world with global challenges, I think we do not need to be always like looking at, hey, we need to keep that startup forever here in our environment. But why not that, for example, Europe becomes the source of the early stages with the innovation, and then like certain growth stages might be in the US, might be actually with certain developers in Southeast Asia, might be developers in Eastern Europe. And each area in the world builds their own cluster, and a productive manager, now speaking also of COVID times, we are speaking here on Zoom, should be able to manage those global teams, still being able to sit and run their company from wherever they are. And yeah, taking the advantages, and I'm not saying abusing advantages, but taking advantage of the certain areas which produce and have the right capabilities and resources to run and grow their business.
No, completely, and I think it's a good point. I think we need to look at the opportunities, and of course, as someone in Europe, of course, I love my continent, but I think it's this pragmatism that I think we need instead of too much theory. But well, of course, we are theoretical people, both of us. But well, moving forward in terms of some of the areas of your research. In terms of you've been, especially, of course, you continue teaching in multiple universities, and you are quite involved over there in south of France. So can you tell us a bit that work that you're doing right now, and especially the areas of research that you're doing and your main projects at the moment, both academic and non-academic?
Yeah, definitely. So on the academic side, well, besides that, I really have joy and pleasure working with young students, creative minds, understanding their needs, their worries, and also how they are thinking of tackling future problems is really impressive. And also it helps to understand, like from now, even then doing here with the move towards the investor point of view, to see what are future trends, like how do young people see living in future cities? Are they still keen on owning 2-3 cars, having the goal being an investment banker and owning like a Ferrari, a Lamborghini, or whatever, or are they more keen on spending time somewhere outdoors with their family, being digitally connected, maybe still to their job, doing some sort of home office? It's quite interesting to see the shifts of students' interests and how they come up with very innovative ideas on working on that. That brings me then to the other side, like the professional side. Having that academic contact, but being able from a professional point of view to grow those ideas into real businesses, help them accelerate. And yeah, of course, those businesses, they are not non-profit organizations, so they're there to make money. And it's nice to see some of them really succeeding, and and having a little bit fun with it at the same time, which I think is still an important part. Like if there's no fun with it, then why doing it?
You've been doing with startups, and I know that you've been advising a lot of startups. Can you tell us a bit that work and some of the startups that you highlight on this work?
Yep, absolutely. So currently I'm very proactive with a startup in early stages, and I cannot tell you too much because they're still in stealth mode, as many startups are. But that's actually something I see also sometimes as a criticism. Startups often think they're too important to share information with other ones.
Especially in Europe. I think it's only in Europe.
It's a European thing, but yeah, people seem to not trusting each other. But in reality, everybody is so busy, so startups don't have time to copy from another startup. And by the time the product is launched, there's always someone bigger in the market who could do it if they would want to do it. Reality is they're often so busy with their own stuff that they don't see it for a long time. Until it's too late. At least that's the story of the big unicorns. The startups I'm currently working with, which I cannot tell you yet too much, but big news to come, is in the real estate space throughout Europe. So entering actually 4 countries relatively soon, one after the other, starting with the German market. And here the nice thing is actually that it's an idea which is traditional, existing in 2 or 3 European countries, but doesn't exist in the other countries. And the funny idea is actually to enter now the German market where something like that doesn't exist. But then going back in a second step to the country where it already exists, but having it in a much more innovative way than it is existing there. So here I'm excited to see the balance on how the market will react to it, to a product which the customers are not used to, and the startup needs to explain the customers kind of the need, why it's important to do it. Vice versa, a country where the customer knows they have the need, but simply will be getting a better product than what is currently out there in the market, and seeing where such a business works better. I think that's a very interesting challenge that startup has. On the one hand, facing the strong competition in the UK, actually, where it already exists, compared to where there's basically no competition, but also no demand. That's one of the exciting spaces, I believe. Then, of course, I've been working with a number of fintech companies. The thing is with the fintechs, I had the feeling, same as certain other crypto type of businesses, is there are always market trends to it. And that's something I personally don't really like, because sometimes short-term investors take big advantages out of those businesses. But like those people who are really interested in the long-term success and that those innovations become a success are kind of outperformed by bigger investors in the market who are just riding the wave. And as you know, like the startups succeed not only because of the team, but also a lot about the timing and having the right money at the right time. So there are fantastic ideas out there, fantastic startups, which simply weren't able to raise the right funding and failed for that reason, or didn't have enough runway, hence timing, to raise the right funding. And that's a bit the downside of those like trend industries like fintechs, currently actually prop tech, now still speaking of real estate space, prop tech being one of the newcomers in the industry, and yeah, and all the other ones which we had in the past, from social media to whatever. So yeah, then I have to admit also all the time involved typically in those waves, because as you see at that time simply so much happening in those industries, which kind of almost naturally drags you to working with that type of startups. As yes, it makes sense sometimes also to use the momentum of them. Well, I mean, I recently had a paper published in a peer-reviewed journal, which was very similar to one of the previous ones which you have mentioned. So I've been looking in various countries into stock-listed companies and how the employee stock ownership affects the cost of capital. So one of my recent papers was about the S&P 500. And how their employee stock ownership affects the cost of debt. Hence, the ultimate question is how does the cost of debt or the cost of capital, the cost of equity goes down? Well, it goes down if investors and banks see businesses less risky. And companies which had a higher amount of employees holding shares in the company were definitely seen as less risky. Hence, they got preferential terms when raising capital. So that's one of my recent papers. Even though like I'm often speaking here in our today's call about the stock listed companies which are related to my research, one thing I want to highlight there is it's not in every startup, now making here the comparison, that employee stock ownership works. In that case, really like at extremely early stages, it might work, because employees feel being part of the team. So essentially it's the founders, the employees in that moment. And they are very motivated by having shares in the company. Then in the early like seed stages, Series A, Series B, employees tend to be not that much motivated by shares in the company, because the company is still seen as extremely risky. And those employees or those people working for those startups, they need to be still be motivated through like their regular income, as they need to pay their rent, they might have a family to still stay in, they need to pay their food, so they cannot live out of shares. So at this moment, it's probably less attractive. However, then at later growth stages, when the company is raising like bigger rounds, and the startup knows, and also the employees with that know, that the company will have like a higher success chance at this point, and probably the money is not running out, so the runway got longer, the company got some traction, has like a proper, is accepted by the market, so the chances of failure in that moment are much lower. So that's a moment where it definitely makes sense for employees or for companies to get shares or options in the business, whatever it might be in that case. Yeah, sorry.
Very good. So in terms of, and I think wrapping up the interview, we are close to 1 hour. So in terms of, especially, I know that you've been studying a lot of things related to sustainability, and you touched a bit that, and as well smart cities. So what are your views on this? Because I know that Europe is quite advanced on that. And actually, ironically, Nice and south of France had some of the first experience on the 70s in terms of this area, precisely where you're living right now. So how do you see this angle, which is especially with COVID, but as well is going to be incredible more important as we go into the next Society 5.0 and the next decades?
I think sustainability and smart cities are extremely important for the future development of society in general. I'm a little bit worried here, thinking of the European market, because to develop smart cities is you almost need to build new infrastructure. New infrastructure is very costly. It's not that easy to develop smart city elements to already old infrastructures, cities. Thinking now of like even the south of France here, like the developing systems here, which are really consistent and not like just like a little bit like cherry picking here and there, but having their really overall clear strategy is very complicated. That's why you see, for example, in the Middle East or Singapore, so Asia, cities which are really much more advanced on the smart city side. And I think where the real interest should lie from the European side, the city infrastructures are quite old. So to develop smart city models, which are applicable even in those old infrastructures without having to tear down the entire city, which is most likely impossible for cost reasons, for efficiency reasons. So like, yeah, well, there's that balance between what can be done, but also what is still like affordable. And those are the challenges for, let's say, the developed world, but also I see that as opportunities for developing countries.
Oh, very interesting. So, and in terms of probably one of the last questions, so as someone that has been always on the bridge between academic world and as well the business and investment world, and as well with your own organization, so what would be the advice that you give as a teacher and as well as an entrepreneur and as well as a thought leader for these generations of business and startups in Europe, as well other students and people that are right now listening to us all over the world in these areas that we've been discussing so far?
Well, I mean, I could say now a slogan of a big sports brand, just do it. But reality, it is a bit like this. That's a bit the problem in our society, that people are overthinking things. And I think like if you're young, if you're entrepreneurial, you have maybe less responsibilities. That's really the opportunity where you can innovate, you can think freely, you can go out. And then for the little bit elder generations like ourselves, I think is like let yourself once in a while remind yourself of that free spirit, and sometimes be willing to take a certain risk, go out of the comfort zone and start building something on your own, which ultimately will benefit the society around you. So I think that's that's really the way to go.
No, I appreciate. So, Alexander, where people can find the information about you? I know that you're not completely social media visible, but some of your papers, some of your research, some of your websites.
Yeah, my papers are you can find on ResearchGate. I have a small profile there. Same LinkedIn. There are a number of papers there. I might have to update them, but yeah, you find me on LinkedIn. The other social media I have, but I have to admit I use them much more on a smaller scale or with the startups I'm working with, as I need them to understand what's going on in the market. But myself, it's true, I'm a little bit less publicly available. Still, my email and my contact details are on LinkedIn. So feel free, anybody who has questions, who would like to discuss, contact me on LinkedIn, send me a message, send me an email, and I'm happy to jump on a call with you.
Thank you so much, Alexander. It's been a pleasure. A lot of topics here to think, and as well, very positive ideas for society. So I appreciate and looking forward for the next one. Okay, all the best. Thank you.
Thank you for your time. Thanks. Have a nice day.
Cheers.
Bye bye.
Thank you so much. Thank you.